In this video, we're going to cover realistic SIP situations. The whole point of this is, we've heard stories, there's so much marketing that goes on SIPs. We hear about how you should put your money away and how you should just leave it and how it'll keep growing. And those may not be realistic scenarios all the time. There will be times when you will have money lying in your bank account. You can do a lump sum and add to your SIP investment. There are going to be times when you need money, you'll have to pull money out. There are going to be times when the NAV will fall and your market value will be lower than your cost. So, it'll actually be a loss making proposition for a while. Um, so, the goal is to ensure that you deal correctly with the situation so that you have a long term perspective and you allow your money to grow over a period of time. You don't want to be making quick and rash decisions. You have to be invested in the market to make money. You can't really time the market and say that I'm going to get out when it's high and I'm going to buy when it's low, because it doesn't work. We all work, we all are busy with our regular lives, and if you miss that situation or you miss that point, you will have to wait for the next point, and that doesn't make sense. So it's always better to put money in small chunks in the market and make sure you grow it over time. And if your SIP has a reasonably positive annualized return, you've achieved your objective. The first fund we're going to be looking at is the FlexiCap fund, which is an equity fund. I started with a SIP of 2,200 rupees in 2019 and stopped the SIP in 2020. I restarted the SIP for 5,000 rupees in 2021 and I stopped in 2022. The reason for stopping the SIPs was the fact that I was consulting and I didn't have regular income. So every time I stopped having regular income, I stopped my SIPs. But I still had money in the bank account. So when I did have money, I did lump sums. And so that's why I wanted to show you this fund. So you can see that I was doing the SIPs when I was earning money on a regular basis. And I also did a lump sum when there was money available in my bank account. I have not sold the units of this fund, and the XIRR is 21.66%. XIRR is an annualized returns figure. So when I say 21.66%, it means that every year that I've held this investment, I've earned 21.66%. Coming to the chart, you can see that there are two lines. The light blue line is the cumulative cost line. So with every investment, the cumulative cost goes up, and when there is no additional investment, the cumulative cost flatlines. The dark blue line is the market value line. So this is showing me what the market value is for all the investments that I've made in this fund at a particular amount in time. Looking at the left side of the chart, you can see that the lines are pretty flat because the SIP amount was low. It was only 2,200 rupees at that point. And there isn't really much separation between the dark blue line and the light blue line. When the dark blue line is above the light blue line, your SIP is earning money. When the dark blue line is below the light blue line, your SIP is losing money. Then you can see over here in 2021 that the lump sum investment was made. So that's why both the light blue and the dark blue lines move up. And then you can see that the SIP of 5,000 kicked in. So there is a gradual slope in the cumulative cost, which is the light blue line. And then when the SIP was stopped again in 2022, the cumulative cost flatlines. But the market value is interesting over here because the cost and the market value were kind of aligned all the way through, even after the 4 lakh investment was made. And the fund wasn't as profitable at that point. But then the separation between the market value and the cumulative cost started being seen. And at the point when the SIP stopped, the markets have taken off since then. So you can see that the separation between the market value and the cumulative cost has just been going up over time. And the investment of 4.5 lakhs that I made has now become about more than 9 lakhs. So the money has doubled. The next one we're going to look at is a focused equity fund. I started a SIP of 2000 rupees in 2008 during the global financial crisis and continued the SIP through 2012. I subsequently redeemed units because I felt that the returns on this fund weren't that great, and the returns that I got at the point of redemption were about 9.47%, which is not very good for this kind of a fund. The interesting thing to show you here on the chart is that the dark blue line is below the light blue line during the global financial crisis in 2008 and 2009, and that means the SIP was losing money at that point. But as markets recovered, you can see that the dark blue line moved above the light blue line and stayed that way up until the money was redeemed. So the gap between the dark blue line and the light blue line is the profit at that particular point. So the key thing to show you here is SIPs may be negative for a while, but they can turn around as well. We're now going to look at a pension fund, which is 60% debt and 40% equity. I started with a SIP of 2000 rupees in 2013. The SIP value increased to 2500 in 2017 and then further increased to 5000 rupees in 2020. The changing SIP value shows that as more and more income is made, you can increase your SIP values so that you can see better gains down the road. The SIP stopped in September 2020. The units are still held, and the XIRR return on this fund is 10.18%. Again, XIRR is annualized and compounded, and for this type of a fund, 10.18% is a pretty good return. Looking at the chart, you can see that there is a separation between the dark blue line and the light blue line, where the dark blue line is above the light blue line, so the SIP has been positive. And you can see that the gap between the dark blue line and the light blue lines increases over time. That just shows that the gain has been going up. We're now going to look at a sectoral equity fund. A SIP of 1000 rupees was started in 2015, and the SIP value was increased to 5000 rupees in 2018. A redemption of approximately 90,000 was made in 2020. The balance units are still held, and the XIRR is 12.76%, which is a decent value. If you look at the chart, you can see that the slope of both the light blue line and the dark blue line is gradual, but when the SIP value is increased, the slope is higher. And then you can see that when the redemption was made in 2020, both lines come down, and then you can see that the SIP continues so that both lines start going up again, and then the SIP is stopped. So the light blue line flatlines at that point, but the fund performs well. So the dark blue line keeps going upwards, and that initial investment of less than a lakh is now more than 2 lakhs. The last fund we're going to look at is a value fund, which is again an equity fund. Started with a SIP of 2000 rupees in 2013. SIP value was increased to 2500 in 2017. A lump sum of about 50,000 rupees was also made in 2013. In terms of outflows, a 1 lakh redemption was made in 2015. Then a second redemption of about 2 lakhs was made in 2020, and a final redemption of about 40,000 was made in 2021. The XIRR at the point of the redemption, final redemption, was 10.63%, which is a decent return. Ideally, on an equity fund, you should be making between 12 and 15% returns on your SIP. And this is over a period of time. You don't want to look at it short term. You want it to be at least a couple of years before you start assessing whether the returns have been positive or not. Because when you look at short terms, markets may be in a turmoil as we currently are in October and November of 2024. And looking at those returns on a short term basis may not be conducive to good decisions. Coming to the chart, you can see on the left that the initial SIP and then the lump sum of 50,000 lead both the light blue and dark blue lines to spike up. And then there is a gradual movement upwards because of the SIP. You can see that in 2015 there was a redemption, so you see the lines coming down. The dark blue line comes down more than the light blue line because there has been a significant gain. So even though I pulled 1 lakh out, my cost went down by a lot less than that because there was a decent amount of profit. You can then see that the light blue line continues upwards gradually, and that's because of the ongoing SIPs. When the redemption of about 2 lakhs is made in 2020, you can see again both lines coming down. The blue line is again much longer than the light blue line, and that is again because the fund was doing reasonably well. So even though I pulled out 2 lakhs, my cost was reduced by a lot less than that. And finally, with the last redemption, everything comes down to zero. I hope that the video was helpful. Do reach out to me at the email ID and the mobile number provided. Please do visit my website as well, which is www.aditshah.in. Links to my social media handles are available there. It'll be very helpful if you follow me. Thanks for taking the time to watch this video.